welcome back to the channel. JCL here. Today we're going to have a look at Aviva, look at the recent news that's come out about the stock, and if you stay tuned later in the video, I'll share how my holding in Aviva is performing. Just before we start, if you're new to the channel, we look at my journey to £1 million portfolio here. We also do stock reviews and kind of finance, how-tos, personal finance and investing. So there's been some big Aviva news that's come out recently. So Aviva, and in fact, if you don't know what Aviva do, they are a UK, Ireland and Canada focused company, and they look at savings, retirement and insurance. And just for full disclosure, I have actually been a customer of Aviva's on various products, and I've had really good experiences with them. Now, Aviva is planning to buy back 10% of its share capital. So they've got a big share buyback program going on, as well as a wider program they've been undergoing recently under their relatively new leadership to undo some of the diversification in their business. So if you're an Aviva shareholder, you've got these share buybacks coming, which for me is a really, really good thing, because it's a very good use of the company's capital, because it guarantees an increase in your holding in the company. So you can't really lose from it, particularly if the company doesn't have a massive kind of return on equity. So they're probably thinking, well, we've got all this extra capital, what's a good use to deliver value to shareholders? You can have your special dividends, for example, but that is kind of a one-off benefit, whereas the share buyback's an enduring benefit because there are less shares in circulation. You can see here that this repurchase program could now be underway, and it's got around about 6 months to run until the first quarter, mid of the first quarter next year. Now, if we have a look at what Aviva's been up to, I've bought various points along this kind of upward trend, and there was a bit of a dip back in July down to about £3.77. Now, had that gone down to sort of the 350 range, I would have added to my holding at that point. However, didn't quite get there, and it has recovered a fair bit recently. So what do we know about Aviva in terms of the strength of the company? So Aviva is a very good and well-known business at what it does. And if I look at Simply Wall Street as a first of all bit of an estimate, you can see that the current price is substantially below their estimated fair value. And whether it gets quite up to £7.77, I'm not sure, but I think there is certainly a chance. Price to book here of 0.9, so that suggests that the company is trading slightly below its kind of net asset value, you might say. There's perhaps a little bit of a discount there. Looking at the earnings here, we're probably not expecting massive changes in the earnings. It's very much a stable company, and it's going to be focusing on its core markets going forward. There's not a massive amount of debt in terms of comparing the debt to equity, and you can see the assets and liabilities are relatively closely matched. The current dividend yield is 5%, and you can see the ex-dividend date is very, very soon, so 26th of August. So if you are interested in buying this stock, receiving the next dividend, you need to get a move on. There has been quite a lot of internal insider purchases over the last 12 months. And if you have a look at the price levels here, we've even got one guy buying at 424, which is very recent prices. That suggests there's probably a bit more room to go. Now, with Aviva, so far, by various purchases over the last year and so, I've returned 40%, so it's a good holding. One of my favourite companies. And if there was another drop off down into sort of the 350 region, I would buy more. This news here from Bloomberg as well, and Aviva is going to be returning at least $4 billion to the shareholders. And you can see here they're getting all of those non-core businesses I referenced earlier. So that's obviously we've got the share buyback that we've already looked at, but we'll also have higher dividends and probably some special dividends as well. See here, they're not just giving money back to shareholders, they are paying down some debt, and that's a good thing. It gives them more flexibility in the future, particularly to respond to unexpected or negative events. If you have a look at the market cap, it is 16 billion, so a 4 billion return is a very large proportion. It's a quarter of that market cap. So this is a significant move by Aviva, and we've got a forward dividend yield of 5%, so it's still a pretty good dividend. We've seen the debt doesn't look too excessive. Saying if you're perhaps near retirement age, you're looking for dividend or income investing, I think Aviva is a really good choice. I think it's slightly undervalued at that 0.9 price to book. I think in the next 5 years, could the share price double? I can't see it getting to £8.28. I could certainly see it going up to the sort of £6 region, maybe even to 7. I think if I was to add more to this position, I definitely would need that price to be in that 350 region. So that's Aviva. So I think it's a decent investment now if you want some income and a good dividend stock. Very stable company, and it seems to be pretty well run. So that's my view. That's the news. Let me know what you think below. Are you an Aviva shareholder? Or indeed, are you thinking of buying or even selling the shares? I certainly wouldn't be looking to sell at the moment. I think this is a good hold due to the buyback and the dividends that are coming. So yeah, if you're invested in them, good luck with the hold, and let's see what the next couple of years holds. It looks like there's be quite a lot of benefit coming to the shareholders. So thanks for watching. Aviva is going to stay a core part of my portfolio, and I look forward to catching you on the next one.